Nearly 1 million jobs just evaporated overnight. Or did they? Let's see if we can get behind the headlines. In this video, I'll tell you if you're at risk of losing your job, losing your money in the markets, and how everything happening in the job market will affect the rest of the economy in the next 6 to 12 months. And I'll also give you the jobs toolkit that you can use to read the economy, stay informed, and know what's going on in your world. Welcome to This Week on Wall Street. I'm MattWeinschenk. I'm an economist and financial researcher with over 20 years experience here at Stansberry Research. And this week, things went a little crazy at the BLS, or the Bureau of Labor Statistics. They now say we created 911,000 fewer jobs than they thought. In other words, nearly 1 million jobs just disappeared. So in August of each year, the BLS goes back and revises its count for the prior year. Over the time, it gets better data and can better understand what job creation actually looked like. So this time, the revision, about 1 million jobs, was triple what it normally is. This sent headlines spewing messages of a poor job market, but I'm here to tell you it's not quite as bad as it sounds. Yes, they were overcounting, and I'll explain more about that later. But the point is, if you know how to look beyond the headlines, the job market looks better than you would think when you hear we've lost 1 million jobs. So if you do look beyond, you should feel a little better about the markets and your place in the economy. Now, I'm not saying things are great. I can point to a number of worries you can and should have about the economy. For instance, tariffs are still roiling the market. I've got my trade war playbook. It's a concise guide to spotting the next big winners and protecting your portfolio in this new era. You can get that 100% free in the link in the description at tradewarplaybook.com. But back to the labor market, it looks surprisingly resilient despite these dour headlines. So first, let's look at this revision. One, it's good that the agency is still reporting data, even if it doesn't look good. You probably remember that last month, President Trump fired the BLS commissioner after the agency reported weak job growth. Trump didn't like the job numbers, so he fired the messenger. Now, people have understood, at least since ancient Greece, that if you shoot the messenger, you eventually don't get the honest, important messages you need. And in this case, that would be the real data on the economy. But for now, it's good to see the BLS isn't cooking up happy stats just to please the president. So a loss of 911,000 jobs doesn't make anyone look good. What is good is that this is just a counting error, right? We didn't actually lose 1 million jobs. The economy is the same as it was last week. We just understand it a little bit differently. And the market shrugged it off. That's a good sign. Stocks have risen through the week and continue playing with all-time highs. So aside from that revisions data, what is up with jobs? Well, first, let's look at the last few months of this job creation number because we had a lot of concerns about the health of the job market already. And I will tell you why. It's because the pace of job creation had already been slowing. When you look at the jobs number, you want to see about 100,000 jobs created each month, maybe 150,000. More than that's great. That means growth. Less than that means the economy is lagging. And you can call that 100,000 jobs like the break-even rate. And that's because the country is growing. College kids are graduating and joining the workforce. So 100,000 jobs is enough to keep pace with that and keep people working. But in recent months, the number of jobs created each month has been in a steady downtrend. You can see we had great job growth as the economy recovered from the pandemic. Then it settled in around that 100,000 range for a while. But as 2025 has run on, it has dropped dramatically. Notably, we saw a loss of 13,000 jobs in June and a gain of only 22,000 in August. So what should you think about this? Well, it's not good news. I'll give you that, but it's not as bad as it looks at first because the economy has changed and 100,000 jobs per month may not be the goal any longer. The rate of population growth is changing dramatically thanks to, yes, Trump again. And that's because of Trump's immigration policies. We have fewer people moving here, both legally and illegally. We've got other people being deported. So without those new folks, we need fewer new jobs to put them to work. And in many roles, businesses want to hire badly, but are struggling to find workers. In other words, job growth has dropped, but it's not weak demand due to a weak economy, but simply less supply. So rather than 100,000 per month. The new break-even number, it's lower. It's hard to say exactly, but some detailed studies put that new number somewhere between 10,000 and 50,000 per month. So as you watch the job creation numbers to keep up with the economy, watch for this new normal. Now, I have to say, even if jobs are okay, these policies could still create a concern about GDP and economic growth. A growing population is very important to keep the economy on an upward trajectory, and immigration adds both productive workers and active consumers. That is how we grow. It's all part of the complex interplay of our economy and the data. But it does mean that lower job numbers have a different meaning than they did in 2024. I can show you some more optimism in the job numbers if you'd like. Look at the unemployment rate. Rather than count the number of jobs created, this measures the number of people who are looking for a job but can't find one and puts it as a percentage of the workforce. And unemployment is stable and low at around 4.3%. That backs up our earlier argument that the job market has changed. This number is not going up even though fewer jobs were created. So the labor market is still pretty tight. Good sign for investors. But what if you're a job seeker, right? What are your employment prospects? Well, you can find all sorts of useful data inside the job numbers that will have a big effect on your livelihood. For instance, the number of job openings right now actually outpaces the number of unemployed job seekers. That's a great thing, and it's pretty rare. Now, doesn't mean everyone can find a job right away. Skills or geography may not match up, but it means there is opportunity out there. And if you look at this chart, it's true openings have come down from the hot job market of 2021 and early 2022, but still pretty healthy. And there's another thing. People are quitting their jobs. That is good. In July, about 3.3% of the workforce was separated from its job. That includes all reasons people leave jobs, layoffs, retirement. A full 2% of the workforce left their job by quitting voluntarily. Now, people mostly quit jobs when they've got a better opportunity or at least have confidence they will find one. Layoffs are bad. Quits are actually good. So if you take 2% quit out of the 3.3% that left their jobs, that means about 60% of the separations come from people who are choosing to quit. That's a pretty good ratio. It's well above what we saw in 2001, 2008 recessions. While it's not as high as the 2021 boom, it's a strong number, and it's actually been on the rise since last September. So, look, the job market's always tough. Young grads are struggling with competition from AI, and it's never easy to find a great job that fits what you may want to do. But digging deeper into these numbers, it was what makes you a better investor. It helps you navigate your world. These slow job numbers aren't a reason to panic, whether that means for your portfolio or for your own employment prospects. And investors need to know the Federal Reserve knows this as well. So if you think this revision will speed the Fed's rate cutting cycle, I don't think it will. Markets expect a quarter-point cut next week, and that hasn't changed with this news. So the economy is always more complex than the headlines, but going just one level deeper can show you the truth about what's going on. And if you want to stay up to date on jobs numbers, on markets, and if you want to learn about specific stocks and other investments that can build your wealth in any market, you need to follow us at Stansberry Research. You should start with my Trade War Playbook, available free at the link in the description. And make sure to hit like and subscribe here on YouTube so you never miss our market insights. That is all for today. I will be back next week.